Aloha and welcome to Java. Thank you kindly for joining me on this Sunday. It's August 4th, 2024. There is a lot going on. We've got a lot to talk about, mostly macro and what's going on with our three tiers that we've been speaking about. So let's go right into it. First, with the markets and their perspective out. So the MMRI, Relative Risk Indicator, as well as the Fear Greed Index. Now, the MMRI has dropped, showing risk has pulled back. We've got a correction going on in the market. Stocks sold off quite a bit, was finally significant in a bit. However, it's not showing panic yet. It did break through a couple of key levels of support, but we'll watch and see what it does from here. Now, this was on a jobs report that came out a little bit different than expected. Again, the language is guiding how the markets are supposed to react to it. So with the fear greed index, we've got definite fear territory. We're down at 27. So this is a significant drop. So with this sentiment right now, I just want to put in a word about this. It's down, but it's not broken yet. So with this, we've still got investors and quite a few that are looking to buy the dip. Now, I had mentioned on Friday not to try to catch falling knives. You just get bloody hands, wait until it settles, and see where it goes from there. So we'll be watching what goes on today for Monday and Tuesday. Now, I don't see the panic, as I said, yet. This is not financial advice, but we're going to see how it is. I think it's bringing some opportunity. Now, with this, we've got a lot of silly predictions, in my opinion, coming out for all of a sudden that Fed is going to have to do an earlier rate cut. They're going to have to do at least 50 basis points in September. And I just don't buy that. So I think that Jay Powell knows what he's doing. He does this all day long, every day. And he's held strong in what he says. So he's going to keep to the path, because if they did something like cut early, the markets would go absolutely nuts and things would get out of control, even if to the wrong direction. So I still think cut in September, nominally, to kind of show that they're willing to play in with this market, and that would give strength to their words to then guide the market again with simply what they say, as opposed to taking any actions with the rates. Now, long term, they are going to continue to inflate. With that, the relative strength of the dollar and the 10-year yield both pulled back significantly. Now, here's where the divergence is happening. Normally, when these both pull back, the stocks will rise because it gives room for the money to flow towards higher risk assets. However, we're seeing a risk of money going into gold, commodities, and flowing out of what's perceived as higher risk stocks. Now, 10-year yield, the yield is coming back because money is flowing into the bonds, but the dollar is getting weak. So we've got the cryptocurrencies all dropped a bit, however, holding above 60,000. This also tells the story they're not as volatile as they used to be, and that Bitcoin is actually holding a little bit more as a risk off asset, not just risk on. So we're watching this asset class change before our eyes. I would also like to make a mention here about what we call the yen carry trade. Now, that's finally coming into light. People are paying a little bit more attention of this. Last Friday, I was speaking about how they are now trying to mitigate that through a different central bank, namely South Korea taking a hit. Their jobs market is now suffering because of this. I've got a little bit more about the yen. I'm studying a little bit more about what that's going on, what is going on there, what that is going to look like. That will be separate. I hope to have that out in the next day or two. So with this is exactly why we're watching other central banks. Now we've got the Bank of Canada seen cutting rates faster after US jobs data. Now, why would their central bank bother after the United States jobs data? Because it moves the market so much. The United States holds the crown of debt, and that really is much larger than the stock market, and will move the rest. This is why we watch the 10-year yield, that is the 10-year bond market, basically. So with this, keeping an eye on that relative strength of the US dollar as well as other central bank cuts, this is part of the currency war. They have to all stay relatively in sync as far as the Western currencies. Now, with that being said, I'd also mentioned on the back of all of this Bank of Japan issues, Bank of Japan, the yen, is the first Western currency that is seen taking a fall. And I said this before, but the importance of this I cannot stress enough. Basically, uh, we're getting a foreshadowing of what is going to begin happening with the other Western currencies if this one is allowed to drop enough. So, with this, back to stocks, we've got recent insider buying and selling. Now, this is the basically the executives tracker of them selling their own stock in their own companies. So we've got a recent spike in selling in many of the larger companies by the executives and the owners. So that's also larger indicator of a risk off attitude going back into cash and gold. Calendar for this week. Quite light. We've got a few reports coming out, but the ones I'm actually going to be watching, aside from the ISM, because these are all good indicators of the actual economy and what's going on, but 10-year note auction, as well as the 30 years coming out on Thursday. Why am I watching these so much? That is the debt market. And we have had what is called an inverted yield curve for the longest period that ever. Typically, historically, when that uninverts is when we see the deep recession coming. So, with this yield curve, we're watching a bull flag signaling uninversion is imminent. So, we knew it had to happen at some point in time. Looks like it's much closer. So, I've got Ukraine in here, again downgraded to selective default. What does this mean? Well, the countries had no money already, and they've got several other countries as well as the United States pouring money into the country, but most of them is money is going uh, to corrupt purposes. Basically, it's not going through, and then also to the war spending. So they're going to default. When they do, that's going to shift things a bit, which could get very interesting. Calendar of earnings for this week. We've got quite a few. However, the bulk of the large ones happened last week, so we've got a few more we're really watching. But the larger money, basically, that was also a part of what hit last week was some of the earnings, and the forward guidance is dropping. So the larger companies also coming out saying demand is softening and the forward guidance for their earnings is dropping. So with that, I've got a few kind of separate stories, if you will. So, first off, every time there is an indicator spoken about, this kind of drives me crazy a little bit. When someone had first brought up to the general marketplace the Wyckoff pattern for technical analysis, then everybody started speaking about this. So now we've got the SAM rule, and basically it's just same thing we've been watching. It's an indicator tied to the labor market. So now that this is coming out, everybody's talking about the SAM rule, and it's kind of silly to me. But anyway, we already know this because in reality, it is labor market weakening. So instead of the numbers being in full time jobs, we've now got twice the number of jobs in, first off, government sector, public sector, which does not really produce, and secondly, in part time jobs as opposed to full time jobs. Now, they've also said that part of this is due to the migration, the illegal migration that has been happening up from the border. Now, we've got a lot more people, obviously, less employment. So, all of this plays in, but really, what we need to watch is what they're saying, because what they're saying is they're programming the masses with the actual words they're using. Okay, so a couple of things. I want to go into stock specific first. Warren Buffett unloading Apple shares. Now, I think this too. The company has gone a bit over, and their product, basically where it is for where the economy is heading, is going to face some serious headwinds. That being said, we've got Amazon came down also, and they're talking about their cloud growth can't make up for the more worrisome trend. Well, they are also into, in the background, as I've said before, artificial intelligence, as well as some other things. They can put a shift into their model, and they're also sitting on a pile of cash. So I think Amazon, once they hit lower levels, again, not financial advice, but it's a good long term hold. So with this, we've got inflation will return. So even if it's after the recession, depression, it's all just a matter of levels. But we've got some more downturn coming in. And if it goes deep enough, these are going to be some good buys for the longer term, because it will eventually recover prior to going into superinflation, which will surpass the inflation we've got currently. So eventually, but sometime off. Now I'm always early on these things. Just to warn you, we're not talking about this week. We're talking about down the road. So we've got a few other things I'd like to bring up. The first is with Bitcoin. There's over quite a few, 2,200 letters of support for a Bitcoin strategic reserve bill sent to the United States senators. So this would prop up the dollar, and if they did, that could change quite a few things. Now, we'll see if this happens. However, that could be quite a shock if that comes in. So, Bitcoin on the horizon, I think. I don't know if this will happen. I don't think that it can personally, because the drive behind a central bank is to devalue the currency. And this would basically handcuff them to where they can't do that. And as I said, you can expect more inflation and not tying to real assets as far as the United States dollar is in its current form. So USD untied to gold will not be tied to Bitcoin for the same reason. So something I want to touch on, protests. They're talking about this happening in the UK after this event is absolutely awful. However, they're not reporting this very much. They want to keep this quelled, and they want to keep people divided. And as long as they're divided and fighting each other, you're not going to pay attention to what's going on at the top. So I just want to point that out. Okay, now to the other conflicts, because this is all basically been currency wars we're speaking about. Those are happening right now. So we've got currency wars, we've got the trade wars happening, and then we've got the physical wars. So we've had some flare ups. The US and Israel, and I have to be very careful about what I'm speaking about, or they'll strike this video. Anyway, um, attacks that could happen within 48 hours. Well, we'll see what happens, but you have to stay aware of what's going on and be ready for anything. Now, this is interesting. We've got Japan responding to a particular threat, finding support in a new ally. They're speaking about the Philippines. So I can tell you from a first person point of view that the military, United States military, is ramped up in the East. There's quite a bit going on there, both physical and currency wars, and they're staged on two sides again as they were prior. Now, we've also got this coming out, Navy forward deploying multiple, these are basically fighters. They're putting a fighter and just fighters and destroyer for support out in the Middle East. So that's something else going on. Just a lot of ramp up. They're going into this. This is a large part of the GDP, and it keeps things rolling, and also to bolster the USD, because this is what is backing it. Not gold, not Bitcoin, but the military is what strengthens the USD. Okay, with this, I'm sorry this video is getting on long, but there's quite a bit to go over. This is the narrative that I was speaking of. Every time they say something, you have to question it. Now, they are purposefully driving two main counters, if you will. The first one being Iran, second one being Russia. Point the finger, anything bad happens, that's who it is, one or the other. And with this that was going on, they found that there were, you guessed it, Russian ties. So, going to keep an eye on the language that they're putting out because they are trying to program people. And I just want you to be aware of it. So, a couple of last things before I let you go. WorldCoin, this is again Meta tied in with, or pardon me, Microsoft tied in with Chat GPT and Sam Altman. So, launching the Austria Digital ID launch in the news again. So, second one is what I was speaking about with Meta. They're in talks to use the voices of Judi Dench, Aquafina, and others for AI. So, yeah, I don't know. What do you think? Should I work with Meta and become AI voice? I don't think anybody would go for it. Anyway, until I see you again, I hope you have a wonderful rest of your weekend. Have anything for me on any of this, please leave it in the comments. And if you'd like to join our Discord for a little more discussion or just chats and see what's going on along the ways, I'm leaving. I normally leave a link in the description. I'll try and leave one again today. So until I see you again, my friends, stay free.